Wall Street Journal is reporting that U.S. companies are expected to post their strongest quarterly earnings since 2011, the fourth quarter of 2011. Does this suggest that the bull market has more room to run? We go to Jeff Saut, Managing Director and Chief Investment Strategist at Raymond James. Good morning, Jeff.
Good morning.
So here are the numbers. Analysts expect S&P 500 companies to grow 9.1% in the first quarter. The question for you is, are these strong earnings expectations enough to keep investors interested and invested in stocks?
Yeah, I think they are, and I think the carrot in front of the horse. The last number I saw by the S&P Corporation was around $130 for bottom-up operating earnings this year. But bear in mind, for every 1 point reduction in the corporate tax rate, it hypothetically adds $1.31. So if President Trump gets a 15% tax rate, that hypothetically adds $26.20 to that $130 estimate. But that's the good news. The bad news is he's not going to get a 15% tax rate, at least what I'm hearing off Capitol Hill. It's going to be somewhere between 20 and 25%, but that still could be additive, and additive enough that stocks are not all that expensive.
You're talking about the importance of these tax cuts, these proposed tax cuts. So your vision between now and the end of the year as we watch earnings growth and we watch Washington policy, what drives the market and what's most important?
I think less regulations and corporate tax cuts, I think, are on the market's mind right here. I also think the improving economy, if you drill down below the superficial figures, the economy is stronger than a garlic milkshake.
A garlic milkshake. Next week, we hear from J.P. Morgan, Chase, Citigroup, Wells Fargo. So we're watching the banking sector. How do you think they're going to do? Are they going to be one of the strongest performing sectors for Q1 earnings?
Yeah, we like the banks in the first and second quarter of this year. You heard President Trump yesterday talk about Dodd-Frank and modifying it. It needs to be modified. It's been onerous to the financial community. It's given the regulators actually control of the financial system in this country, and I think that's about to change.
Jeff Saut, Managing Director and Chief Investment Strategist at Raymond James. Have a beautiful day. Thank you.
Thanks, Jeff.